Right, so the last video I made, I was talking about how I didn't want to make a GME video until we got to our supposed bottom, and I ate shit for a long time. A lot of people thought it was crazy. Well, who's crazy now, bitch? So what I'm going to be doing today is trying to forecast the potentials moving forward. It's one of two options: either it bottomed at 22 or it didn't, and I'm just going to be making the case for both. I'm not really going to be going over the rest of the market too much in this video. If you would like be updated on that, that's where the Discord comes into play. We were long in the CPI, which is awesome. There was one guy who had NVIDIA calls and they went like 6,000%. I was long QQQ, I think I took like 350%, but they ran over 1,000. So last week was awesome. We're gonna keep the momentum going this week. If you would like a discount code, shoot me a message on Twitter and we can work something out. But with that being said, let's dive into GME. So remember I was saying somewhere in this range I was saying there were two possibilities. We either make a run to 31 plus and then dump to 22, or just go right to 22. And we got the run up to 31 plus. Granted, it was a little bit higher than I originally expected, but remember, I was only officially bullish if we came above 38.6, because 38.6 is the wave one low of the 5 swings down, and so we can only really rule out further downside if we clear that upside level, and we didn't, right? So the expected fail for this high that was put in here was between 30.85 up until anywhere under 30.86. So right, it's a relatively big range, but it still failed beneath where it needed to break above, which was a bearish signal. I sold some calls. There's not much more to it. It was easy money. So let's go from the top. Let's go to a clean chart. Is this clean enough? Clean enough, yeah. So there's a case to be made that we might see another leg down, and there's a case to be made that we bottom. First off, this is a very bullish look on the daily time frame. As we came in and put in our final low, this was accompanied by momentum divergence, as you can see here, in the RSI making a lower or a higher low relative to the wave 3 low, which is usually indicative of a bottom. That's what you want to see in your fifth leg. And we can finally count 5 down from the top, where we have 1, 2, 3. This is 4 and 5. Right, there was, it was technically possible to see a rejection point. We can just draw out the connectors with this, and right, that was the top right there. So it was possible to nail it. I didn't sell the top, but if you're selling calls, you're just creating a bag holder, and that I did. But so if we have bottomed, there's a strong case for that, because we were stuck in this downtrend channel for a while, and I'm just gonna visualize it like this, and then we finally got out of it, and we came back and we retested it on Friday before pushing up higher. So this would be the case for a bottom. However, do note that we do have a gap in the daily time frame now at 2311. Right, we just see this is where this candle closed, and we opened here the next day. The low is here. So this whole space between the low on Thursday and the close on Wednesday is an unfilled gap, right? So we can just mark it between 2311 up to, where was the low? 2391 is a gap right here. So just keep an eye on that if we do turn back down. We don't necessarily have to, because we totally came and fulfilled what was necessary to mark a bottom. And we're also still squeezing on that daily time frame, which implies there is a really big move to come. What's interesting is it didn't fire off on this move from 24 up to 35, which I expected it to, and it didn't, which is very interesting. I could go through and mark all the upside gaps, but there really is no point. You get the idea, they're everywhere. I'll just clear those again. So the bullish count it's this, right? It's really it, where we have 1, 2, 3, 4, and 5. And I'll go over the structure one more time, I guess, but where we have super elongated correction down from my log scale. Yeah, fuck that. Super elongated correction. All right, A, B, C, and then you have your 1, 2, 3, 4, 5 within the C leg. And then this big move out that we had in March we're viewing that as the end of the whole correction. And as long as we don't put in a new low relative to this, then this whole idea of you know, a mega rally is correct. But mind you, it still can come below, and it doesn't necessarily invalidate the bigger picture. Just it's a lot to explain. It doesn't really matter. So if we are bullish, it would look like this. It would just go like this, right? Straight up. We would still, even if we make a really strong move up, which would be indicative that we have bottomed, we're still gonna need to put in like a really strong pullback, because this will be your, right, we wanna see that we've marked a move, like an impulse out of the correction, followed by a pullback. If there's no pullback, then there's no wave 2, which is usually the ideal entry if you really wanna lever up. Which is what I'm gonna be watching at least. You know, I'm ready to really size up my buys. I did get a really good buy on Wednesday at 22, and you know, all the power to those that listen to me, because if you were FOMOing, you would have bought at 30 plus, and if you waited, you would have bought at 22. So, bear case would be, it's hard to like put specific price points on it, but because my issue is I can't really count a subdivision down where it would make sense. Right, a bear case would be something like, I don't know, we have 1, 2, this is 3, 4 is here, or something like that, and then a 5 down. To like, it would be like right under 20, be like 19.8-ish, I believe. Right, we can draw that potential here too. So the actual level would be, how long am I going? 7 minutes. Actual level would be here. We'll just measure like that up to here. And it would be 19.79 would be the supposed bottom if we didn't hit it there. And again, there's like a lot of reason to believe that it was put in on Wednesday. Right, we have trend support as well. If I pull up EMAs, right, look at the way this weekly closed, respecting this. God, I hate talking, like I hate like just showing indicators, but. So what do you even call this? Like an inverted hammer, I guess. It's bullish, right? Because I mean, just look at this, right? Price opens here, it goes all the way down, and then it's completely bought up for the rest of the week. So the structure itself is bullish, but you know, you can't really put too much thought into that. It should be supplementing other forms of analysis. But we did come back and we did hold this 200 EMA on a weekly time frame. I'd never really look at a monthly, but monthly held the 50 as well. So, and the monthly is also in a big squeeze too, right? This whole red area, which is indicative of a big move to happen over an elongated time frame. Hint, hint. But yeah, that's about it. So if it's bullish, for me to, you know, totally rule out further downside, you know the level, it needs above this 38.6, and if it's bearish and it comes in to put a final low, because mind you, we do have this gap at 23.11, and it breaks the low at 22, then it would likely come down to 19.8-ish. However, it totally can, you know, move up from here a little bit more, come back, fill this 20, what is it? Let's clear this box, it's annoying me. You know, we can, in theory, get up to like, fuck, I ran out of storage. So yeah, in theory, it can come up a little bit higher from here. I mean, if I were to put an actual concrete level on it, it's too early. It's like too early to really put any level on it, but I would expect between 26.35 and 27-ish, right? I'd probably in this range, and then it can totally turn down pretty hard from there, because if we look, you know, the way it would look on, if we draw it, this is the bear case. You see here, let's just get rid of that. It would look something like this would be your 1 to 26-ish. 2 gets back down to here. You know, super strong pullback, and then 3, 4, 5 off to the races, and that just goes into this one, and then we zoom out, and the rest is history. But that's, you know, the price points are obsolete. Like it either does something or it doesn't, and then you just adjust accordingly as time progresses. So that's what we're looking at. You know, there still needs to be a pullback. Like there will be a pullback at some point, and that's how you know if this is correct or not. If it holds the low that was put in on Wednesday, then all of this, everything that was put that you see here is likely about to ensue. And if it breaks the low that was put in on Wednesday, it will come down to like, what's the level? Bear with me. 19.79-ish. But it does feel like a bit of a stretch, because if this is your 1 and 2 and this is 3 and this is 4, your 4 is not usually going to be that strong. So if we were to put a basic, you know, super simple target on it where we just go from the 2 high to the 3 low, you'd expect it to fail between 23.85 and 25. And so the fact that it didn't fail the 382, which is your most common wave 4 retrace, sorry, if you don't know waves, this is definitely a bit confusing, but you know where to go if you want to learn. But if if this is 1, 2, 3, 4, right, this is like too deep to the upside for me to really think it is a 4. Doesn't mean it's invalid, but still, it's just basic rules. Yeah. I guess really quickly I'll cover SPY, because this is going to play a role in this as well. I don't think we've topped. I think it's coming soon though. Basically the picture is something like this. I assume it'll be 411-ish, just because there's lots of confidence for that. I can draw a stupid trend line like this, and all of a sudden, oh, look at that, it makes sense. But picture here is we have a clear 5 swing down to the downside that was put in at like 348-ish. I believe this was a CPI print where we had that crazy reversal there. And this whole idea of new lows coming is only invalid if we get above the high that was put in August. I don't know the exact level on TradingView. I think it's like 431, 433-ish. Let's check it on Thinkorswim. So, you know, the takeaway is, as long as it stays underneath this high at 431.73, then I'm bearish for much more downside. And my target for SPY is like 315-ish, assuming this is only valid if it, you know, it needs to stay below this high that's put in here. And if it doesn't get up to there this week or the week after, there's no time frame for it. If it doesn't get up to there, then we should get down to like 310, 315-ish, maybe lower. We'll see. There's a lot of crazy narratives going on in the system right now, but you know, just stick to the technicals, stick to what you see, and what I see is a fat fucking gap here, down at 374, and we're 398 now. Granted, I think this is the only unfilled downside gap right now on a daily time frame. I mean, I can go into hourlies, but still. So it's logical to expect to get up here, and you know, my upside rejection target is pretty much the gap fill here into the CPI that we had on, what day was this? September 12th. But yeah, the picture more or less is this. In my opinion, something along the lines of this. I'm not necessarily shorting yet. I'm still gonna, I'm looking to buy one more dip, but then I'm gonna start to short again. So we'll see, it'll be interesting. I feel like there's nothing else to really say though. GME, I covered about everything. It either impulses out of here or it puts one more new low. A case can be made for either. Choose your fighter. I had a great buy at 22. I don't want to size up yet. I want some sort of pullback to add more. And if it goes, yeah, that's about it. So that being said, hopefully this was somewhat enjoyable. I know I sound like a broken record. I can only say the same thing so many times, but I was right about 22 after, you know, like 3 months of people calling me crazy. So let's see if everything else plays out.